Hello everyone and welcome to another Elliott Wave Forecast video blog. My name is Eric. Today is the 6th of March around 7:35 p.m. Eastern Time, and this time we're gonna talk about a very interesting instrument across the market, an instrument that it hasn't participated in the reaction that the market has done since the middle of October, late September, and an instrument that it might be telling us something very about the still possibility that this correction across the indices become something bigger. All right, so let's hit the chart. Let me explain before showing the chart how a flat structure looks like across the market in the Elliott Wave theory. The flat structure is something like a 3 weeks put back in A, a 3 weeks put back in B, and then the market does a 5 weeks decline that it traps most of the traders, because most of the traders overreact to the B wave correction. This is one type of a flat correction, something like this. More simple, 3 down, 3 up, and 5 down. And sometimes the market can even go and doesn't even make new lows, right? And the market ending doing a marginal high below about the previous low, and those 3, 3, and it makes a 5. So we have seen so far strong reactions on the indices across the world, but the reaction I believe that is going to be ending become 5 weeks amongst most of the indices from the lows in late September, middle of October of 2022. The question is that reaction is real, or the question is that reaction is part of a flat? So that's when this instrument, microtechnology, comes in place. Let's take a look at the structure of microtechnology within the grand super cycle. Saying the early 80s, right, is coming and it do a 5 weeks that it ends in red in 2000 like the S&P. Then it did 3 weeks back that it ends around 2008 like the S&P, and then also is showing 1, 2, 3, 4, and 5, and then, but that new highs here in 2022 is higher than the highs on 2000 and 2000. That makes this a bullish sequence, which is telling me that the indices are everything but bearish. The big question now is, has the correction has ended across the indices? And if I overlay in the chart of microtechnology, if I overlay here, for example, the Dow Jones, you're going to see what I'm referring to. The Dow Jones here has rallied and an important model here, right? And this can be a flat from here, and the Dow Jones without a Dow still can make another push lower. If I go to the weekly chart of NU and I add right here the Dow Jones, you guys gonna see what I'm trying to say. You see that the Dow Jones comes, over here, it makes a cycle, it finishes that cycle, it makes a new low right here, never reached the equal X, and it reacted in 5. So it's technically the same trade from here, right? So this instrument NU is very interesting, because if it trades below these lows, that will mean that this is a trap, and then the Dow Jones is gonna go here. Why? Because as of right now, we are labeling the reaction lower as a flat, A, B, and C, right? which is this type of flag right here, right? We labeling like this: 3 down, 3 out, and 5 down, right here. 3 down, 3 out, and 5 down. Now, this move higher is kind of tricky, but it can be the case also that I can break this triangle, move the wave forward over here, and then this being 1, 2, 1, 2, 3, 4, 5, 4, and 5, and then these lows right here becomes A, and whatever correction comes here becomes B. If we look at the RSI, the weekly RSI on NU, it's clear to see that this cycle here has ended with momentum divergence at the lows. So for the bulls around the market, it's very important to understand that NU needs to remain about these lows. If this low is broken, better say, everyone should do understand what does that mean. That will mean that then the red one ended here, that this becomes A, that this becomes B, and a C wave start lower, and consequently the indices, they will follow. So we find this symbol very, very interesting. Yeah, it's bullish. Yes, it's telling me that the indices are everything but bearish, right? They are not bearish. They are in the correction. The market does corrections. But also right here, it's telling me that the symbol needs to hold this. So far, the reaction of the lows is very weak. Just look at it. This is the September lows. Is very weak. The bias needs to run this higher. A break of this low on September, we open the door for the double across the indices, and the 5 weeks reaction that we see, for example, in the DAX, just to mention the DAX, the 5-way reaction that we see right here in the DAX, right, of the lows, which already done a 5-way advance of the lows. Yeah, the DAX can be doing a flat here, and when you don't know the DAX gonna drop over here and trap every buyer across the market. So MU is very interesting. AU, the reaction of the low is very weak, and I do believe that we need to keep an eye on NU every single day. A break lower, open the door. A break higher doesn't mean much because we are far away from here. But at the end, the importance of this instrument is to check at the lows. Why? Because the weakness that is experienced so far, it hasn't rallied. Just keep in mind that if I overlay, for example, the Dow Jones here on the chart, on the same chart, you're gonna see the reaction on the Dow Jones together with NU. Look, you guys gonna see how the Dow Jones has already reached past the 76.4 of the same rally. This one over here has not even reached the 38.02. So always look at the weakers when you want to be bearish to get the next move. Always look at the strongest when you want to be bullish. And that's the point that NU is telling us professional traders that we look up around the market with a different eye. We have no buyers. Like I say, we want to buy the indices, but we have to be careful about it. We want to be smart. That's all for today. I hope you guys enjoyed the video. If you like the video, I invite you guys all to take the beginning of the month promotion. 2 months for the price of one. It's gonna end very soon. You buy a month, you get one free. See you guys around. Thank you guys all.